Every economy has this beating heart, right? A super complex financial system that's all about pumping money where it needs to go. Today, we're going to look inside India's financial heart and break down its two main chambers, the speedy money market and the long-haul capital market. Let's follow the money and see where it all flows.
It's a really simple question, but the answer? It's pretty fascinating. See, money rarely just sits still. It's always on the move, being lent, borrowed, invested, and it does all this in two completely different worlds, each with its own set of rules, its own players, and its own pace.
So before we dive into those two worlds, let's just zoom out and look at the big picture. The Indian financial system is this whole ecosystem. You've got institutions like banks, instruments like stocks and bonds, and all the services that make the whole thing tick. And where do they all meet up? In the financial markets, and that's exactly what we're focusing on today.
All right, so here's the game plan. We'll start by comparing these two financial worlds. Then we're going to take a closer look at the money market. Think of it as a sprint, and we'll even check out its informal side. After that, we'll switch gears to the capital markets marathon. And finally, we'll wrap it all up by looking at the challenges and the modern updates that are shaping India's financial future.
Think of it like this. If you need to get somewhere, you've got different ways to travel, right? Well, it's the same for money. The path it takes depends completely on where it's going and, just as importantly, how fast it needs to get there.
So, the real key here is the difference in time and purpose. The money market? That's a sprint. It's all about short-term needs, anything less than a year. The stuff traded here is super liquid. You can turn it into cash almost instantly, which makes it less risky. But the capital market, well, that's a marathon. It's built for the long term, raising money for huge projects and growth. And, as you'd expect, that means more risk, but also the chance for much bigger rewards.
Let's start our deep dive with the sprint. We're talking about the super fast-paced world that handles the day-to-day cash flow needs of the entire economy. It's what keeps the lights on. And what's really interesting is that the money market isn't just one big thing. Nope, it's split right down the middle. On one side, you've got the formal, regulated, organized sector. And on the other, there's the informal, mostly unregulated, unorganized sector. They're basically two sides of the same coin, but they operate in totally different ways. Sitting at the very top of that organized sector, you have the conductor of the whole orchestra, the Reserve Bank of India, or the RBI. It's the central bank, and its job is to regulate the entire money market and make sure everything is running the way it should. The RBI wears a lot of hats. It's the only one that can issue most of our currency. It's basically the government's personal banker. And this is a big one. It's the banker's bank, which means it sets the rules for all the other commercial banks. It also manages India's foreign currency reserves, and maybe most importantly, it controls the flow of credit. It gets to decide how much money is actually available in the economy at any given time. So, if the RBI is the conductor, then you can think of commercial banks as the real engine of the money market. They're the crucial middlemen that connect savers with investors. They take in our deposits and then channel that money to different parts of the economy that need it. And this leads to one of their most amazing functions, creating credit. It almost feels like magic, but it's actually a pretty simple and very powerful cycle. Here's how it works. It all starts when you deposit money. The bank has to keep a little bit of that as a reserve, but it lends out the rest. That loan then gets deposited somewhere else, and that bank keeps a fraction and lends out its rest. This process just keeps repeating, multiplying the original deposit and creating new money all through the system.
Now, this whole sprint is run using some special tools or instruments. You've got stuff like call money, which is for super short-term borrowing, like overnight. There are treasury bills, which are basically very safe IOUs from the government. And then you have various papers and bills that big companies and banks use to manage their daily cash needs. Every single one is designed for speed and safety.
Okay, let's step over to the other side now. This is the part of the money market that operates kind of off the grid, outside the direct control of the RBI. You see it a lot in rural areas where, formal banks just haven't reached everyone yet. So in this unorganized world, you find a whole different set of players. You've got indigenous bankers who've been around for centuries, using traditional credit notes called hundis. They're super important in places without banks. Then you have moneylenders, who are common in villages and are famous for charging really high interest rates. And then there are these member-based groups like chit funds and nidhis. This whole informal sector fills a really important gap, but it definitely plays by its own rules. All right, let's switch gears. We're moving from the sprint to the marathon. The capital market isn't about today's needs. It's all about funding the country's long-term vision,
building factories, new roads, and launching new companies.
To put it simply, the capital market is where you go to raise funds for the long term. This happens in two main ways: through equity, which is selling ownership stakes with shares, or through debt, like issuing bonds. The whole point is to take savings and turn them into long-term, productive investments, which is absolutely critical for growing the economy.
A good way to think about it is this. The capital market gathers up all the scattered savings from people and companies and channels them, like water, to help businesses and big projects grow. It's the system that turns money sitting in a bank account into active, productive capital that builds the future.
And just like the money market, the capital market has its own structure. It's basically built on a few key pillars. There's a market for government securities, a market for industrial securities, and then all the different institutions and middlemen that help the whole thing run smoothly.
Let's break that down a bit. The gilt-edged market is where government bonds are traded. They're considered so safe that their certificates used to have, literally, golden edges. Then you have the industrial securities market. This is where the real action is for companies. It's split into two parts. You have the primary market, where companies sell brand new shares for the very first time, think IPOs, and then there's the secondary market, which is what you probably know as the stock exchange, where all those existing shares get traded back and forth.
Now, it's important to remember that neither of these markets is perfect. Not at all. Both have faced some pretty big challenges, which has led to a huge wave of reforms to make them more modern, transparent, and just plain better.
So what kind of problems are we talking about? Well, for the money market, the biggest headache is that split structure. Having an unorganized sector operating in the shadows just creates a lack of transparency and coordination. For the capital market, the challenges are a bit different. Things like huge financial scams, insider trading, and people trying to manipulate prices have, in the past, really shaken investors' confidence.
So, to fix these things, India rolled out some massive reforms. SEBI was created, but it was really after the 1992 Harshad Mas scam, that was a real wake-up call, that it was given the actual legal power to police the markets and protect regular investors. The National Stock Exchange, or NSE, was set up as a modern, totally automated exchange. Trading went from people shouting in a big room to just clicking on a computer screen. And now, payment systems like NEFT and RTGS have made moving money around faster and way more secure than ever before.
And that brings us to our final thought for today. We have the sprint of the money market, which is absolutely essential for daily stability. And we have the marathon of the capital market, which is crucial for building the future. As India's economy keeps growing, which race do you think is going to be more important for winning its economic future? It's definitely something to think about.